Good evening. Happy Thursday. So, ladies and gentlemen, I came in here earlier and I started taking trays from somewhere here. Actually, let's do this. Where is this? Trace, settings, charts, show executions. Boom, 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 boom. There. Okay. Let's do this. Let's do this. Which? Let's do this. Let's do this. And let's do this. I started here. Long. Cover. Right here. Cover. Long. Cover. Right? Here I had a hiccups. And we currently somewhere here. But I started looking and after looking, I seen this many times. This one right here. So let me remove that. How you do that now? I don't know. Yeah, it's right here. Let me remove that. Boom. Boom. Okay, put attention. Put attention, ladies and gentlemen, because I'm not playing game. The game I'm not playing. I want the shit to go. I want it to go fast. Anyway, let's not play around. Let me do it this way, because I can do it right. I can do it anyway. Ba-boom, right here. Hopefully here. All right, but we're gonna move this baby because the baby is in the way of progress. Where are Gemini? What happened to my candle? It disappeared. Oh crap. Right here. So I started moving somewhere here around 10 o'clock. I think I came in here a little bit past 10 o'clock. And I started taking trays, right? But pay attention to this. This one right here. This one right here, this black one, we are on the 15 minute. But pay attention to this one right here. That one right there. Let me see if I can do this. I just want the freaking dot, man. Or maybe the arrow. Okay, better. This is better. So see this candle right here? This candle right here shows up. And look at the volume here, right? That's an order block, if you ask me. Look at this piece of, it came back for orders. So I know we came down to like 700 over here. Yeah, we do two there. We're gonna do two there, one here, one there, and another one here. So let's get back to this. So this is huge volume, right? Look at the wick, look at the body, right? And the next candle is lower, however, is a green candle, and look at the body. Look at the size. Check this out. We're gonna do like this. So we get it exactly. Okay, so this one we're gonna clone. We're gonna clone. We're gonna clone, and look at this. Almost the same height as this here, right? And let's continue looking. See this week here? I'm going to do the 50% that Jay from TopStepX showed me on this Fibonacci. Fibonacci right here.
Order filled.
You heard that? Bing bada boom. Bing bada boom. We got one down. One down to go. 1, 2, 3, 4 to go. 4 to go. Okay. So if you're still paying attention, again, I'm going to start from the beginning. I started playing this right here. This here is the 9. This here is my Bollinger Band 2 standard deviation. And then this one here is my Bollinger Band 3 standard deviation. Comprendo, capisce, understand? Okay.
Order filled.
Oh, look at that. More. Diddy dong, ding dong, diddy dong, diddy dong dong. Ha 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 ha. In any event, let's keep looking at what we got in here. So this baby, look at that volume, that cell volume. And the next candle is a little one, and look how much. Bam, bam, thank you, ma'am. It's about the same. If I put the box, if I move this box, come on, man. Don't do me like that. Okay, so I'm gonna place this box over here. Over here. The Italian way, over here. It's the same. It's identical. Look at it, it's the same size, but it's green with that much volume right there. Okay. So then, what? Are you telling me I should have sold everything? Is that what you're telling me? Huh. Let me see if you do it like this. I'm gonna. Oh, I only got 3. 1, 2, 3. So I don't have all this shit. Only have 1, 2. Only have 2. So I'm asking this. I'm asking for this. 1 and 2. So in reality, I should just be asking for the goal.
Order filled.
Oh my God, you see how that is? Boom! Ridiculous! Look at that! Live! So, in any way, I see this one, right? And then I started playing, I still kept going a little bit further, and then I see this baby right here, right? I see that, and then I say, let's get short. So I went short, and I ate this bullet right here, right? Oof, look at that! It went all the way to BWAP. At what time? At what time? At what time? What time is that? 1:15. Wow. And then I placed the anchor BWAP right here. Anchor BWAP right there. See that white line? But then I put this 50%, right? I was thinking about that and I placed this 50% and I said, bam, only halfway. So this is telling me that, I mean, my instinct was telling me the right thing to go short. And I went short. I went short. And I held and I held. And I was a little bit hesitant right here. I think I even got out. I don't remember what I did. In any event, I got hesitant and then I said, what the hell? What the Gemini? What should I do? Blah, blah, blah. So I said, let me just keep it. And I kept it. I kept it because I was looking down here, my Heikin candles, and over here, my Renko chart, and right here, my 5 minute. And I was like, yes, no, what should I do? And then I started looking back and I said, this baby here is, I seen it before. And that right there gave me the confidence to stay on it. Man, this would have been like a $5,000 trade. But I didn't. Quite honestly, I didn't think it was going to come down this hard. And honest, and this point of control, at one time it came up here, and I was worried. If you see this tape, you rewind this tape, and you'll see that the point of control from down here it came up here, and originally, and till right now, this time, my focus is to go down here. Point of control. From here, go, and he came back here. Damn, I'm thirsty. My throat hurts. I'm teaching English so I can get funded, so I can get funds to pay for my combine because it's due. It's due today, the 13th. I am grateful that I'm able to do this. Very grateful, man. Wow. Let's see how the other baby is at 3,000. This one is always high, higher than this one. Is about $1,000 higher. 34 versus, yeah, almost $1,000. Wow. Would this go here? Very, very likely. So I'm gonna place that flag right here because I'm leaving. Sayonara. Hasta la vista. Ni hao ma. Arigato gozaimasu ka. Salam alaikum. Bonjour. Arrivederci. Sayonara. All of that good stuff. So I'm happy. Very happy. Very happy. Oh man. Let me see how my friend Gold is doing. I didn't even look at um, the other places. I just, man, I wanna get rid of all this, especially this one, this one, this one, this one, this one, this one, MKD, and MQ. That's it. Now I'm gonna do the other ones. So now I have the big ones, and now I'm gonna do the other ones. Let me start with the ones I really like. This Bitcoin, yeah, I want that Bitcoin to be in the middle of that. So now we're just going to do the M's. CL is the first one. See, it just goes wherever it wants. It doesn't go where you want, it goes where it wants. I wonder if it's in the micro bullcrap. Let me put the MKT. MKT. Hold on. We need somebody to be talking, man. We need somebody to talk. I want to see. Oh no, he has music. I cannot put him on. This guy.
I only trade 1 4-hour candle a day and still manage to make over $500 a day. And the simple purpose of understanding this concept is to allow you guys to take advantage of impulsive markets. On our previous video, we spoke about the candle range video, which we use in ranging markets. However, as I've studied this 1 4-hour candle for the last 4 years, I've realized that it can do one of two things, either range or impulse. And I'll teach you guys today how to take advantage of the continuation of this 4-hour candle. Now, we only have two scenarios that we're looking for every single day. We mark out our 4-hour 5 AM candle high and low point. When price pushes above, we're looking to buy and continue the trend upward. However, price continues to go down lower, we will then look to
Just messed that up. I just messed that up. I'm sorry. Forgive the whatever.
look to sell on that specific day. How does this truly work? It is simply based off of your 1 4-hour candle close. This is a bullish candle, so this is the 4-hour close,
Okay,
and this is a bearish
so
candle, so this is the 4-hour
what I
close.
was
Now,
saying,
first, you also have to understand
what I was
that
saying is that this is a major
each and every single day.
long. I like it long.
Firstly, you have to understand
Gonna
that the
try
1
it,
candle is a lower time
but I'm
frame
gonna try it
movement.
my
For a
way.
bullish candle, once
Oh,
price
this
opens, we start off
is
that candle
frozen.
with a ranging
No, it's
move.
not frozen.
We then manipulate to create the low of that session. We then distribute to
Long,
create the high of that session,
long.
and then later on we then
Ooh,
start to use
here.
a bit more volatility
Ooh.
as we come to the closing
Actually,
hour
3. I
of
usually
that
do
candle.
3.
And the same goes with a bearish candle, but on a
So
simpler framework.
then I go
We
here
then
like
consolidate,
this.
we manipulate, and then we distribute lower,
949.
and then
Let's
start
see
to
if he
resell
comes
as
back
price
for
and
me.
then
If he
close.
comes back
This
for
is our
me, it's a
1
good
candle
sign.
mechanics.
Why?
Now, to get to this
Because look at
new
that
method to
wick
take
versus the
advantage of
body.
days when price looks to impulse up
See,
higher.
and then we got
When we talk
6
about
more
candle
minutes on
anatomy, you have
this.
to understand
This could
we
be
have
the
a
one
bullish
that
candle and a
returns.
current candle that is
Because
trading
we
in
are
the bullish zone.
about,
And
it
as we
was
see,
at 20
there
right
is
here,
a
right?
transfer of
It
price
was
momentum.
at
Price
20,
comes towards the closing hour. For
22%.
instance, this is 9,
So
18,
now
1 minute before 10 a.m. and then we
it's
start
a
to
good
create
time
the
to buy
new
because
candle.
it's on
The same
sale.
exact candle anatomy is then extended to the next candle. Price then consolidates and
249. See,
opens
it's
up more
coming back for
velocities.
me.
It then manipulates in
Let's
between
see
distribution
how
and
it
then closes
behaves
off
because
and
this
then
is
start
another
to resell.
black to
But
go
by studying
long.
this, you guys can
So
take advantage of every
however
single
this candle
day price candle
finishes right
by
here,
focusing on
how he finishes is going to dictate if it's going to go up back to point of control or not. Okay, he came real close to pick me up. 49.9. Didn't want it to go 49.5. But I guarantee you it's going to push. It's coming. It's coming. Will you come?
In this area, you'll then be able to find lower time frame demand zones or fair value gaps that you can use to support.
Oh my God, he went to 50 already.
For the day, as well as for your
Well, that's not far. Oh, come on, come on, come on. Look at all this.
And as you can see, we then extend
At 133, 139, 133, this printed. Look at all that support.
And this also the new candle with a first retracement.
All that support. Look at that. 100 at 48.
Impulse and retracement model.
Are they going long or are they going short? This right here has me twisted. If anybody out there knows how to read this, please let me know. Does this mean that they had their orders and they just got covered or what? What's the deal there? What's the deal there? That's what I want to know right now. Just kidding. But if anybody knows, please let me know. Anyway, what we were doing, oh, forgot that. Okay, so what we were doing prior to this fiasco here, come on, come on, come on, come on, come on, come on, 53, 53, 53, get you 52, 52, 51, la 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 la. In any event, we were playing with this, right? So CJ, ES, GC, and MQ, and then we're gonna do the minis. We're gonna do the minis. Where are they?
Because within any pulse market, you're not looking for price to make deep.
Let's see where the.
Looking for very short retracements.
Oh man, I messed up. That's not what I want to know. Too. You full of dirty stuff. Okay, so let's go back again. Is this not chilling? Did it pick me up? Did it pick me up? Oh, this is of course this is not what I'm looking for right here.
Order filled.
Okay, so now I'm filled. I'm filled. What the? Oh my God, I'm long. Oh yeah, that was the idea. Long on GC. Wow. Oh, this is telling me that this is going south. It's telling me it's going south. This is real serious stuff, my friend. Very serious. But as serious as it is,
now here's a few tips to further enhance this.
Scary, but not too scary, because you want to, according to the people that I have previously listened to, they always say get in on a moving average, get out on a moving average. So right here we're in moving average. We hoping that we have what, 2 minutes that this candle makes it happen long. Oh, excuse me.
Basic one you can always take advantage of is your total swoop. The price takes out a
okay, I think this guy is
this is the prime model you want to be using.
Okay, so what are we doing here? We back here. This is what we're doing. 1, 2, 3, 4. And now we're looking for
starting off with the opening, manipulating, and then you're looking to enter within that distribution to target lower. Now, let's go over some quick things. What is the best time to trade this? It is from 9 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time during your New York AM session. The best market conditions to trade this is in the name, candle impulse theory. So you're trading this within impulsive markets. This is an example of an impulsive market.
First gold,
and you can take advantage of
or oil. What do you want, oil or gold?
As here's your previous candle close. Price wicks up and then it distributes lower. Price closes, wicks up, and then distributes lower. Every single wick up,
I think the first one here is
that move. And
is oil.
/pairs to trade this is my personal favorite. My personal ones that I trade it is gold and NASDAQ, and these are highly impulsive pairs. And then the rest that my other students trade is BTC. All of these work on various amounts of assets. Now let's take a look at a trade example we took this week.
Damn, that shit is so
Over
fucking
$500
small.
for the day. That took live with our students. So this is an example of the first trade we took this week. Now to make your life a lot easier when you use this model, you want to get out this indicator called the TTM high time frame candle overlay power 3, and all this really does is just marks out your current 4-hour candles. And this is our most latest 4-hour candle. As you can see, it marks out the high, it marks out the
I went long, oh my god.
The low perfectly. However,
I'm gonna exit right here. Let me see. I got 3.
And then we also want to get out our gap box that has our levels. So doing that from the high or the low, as you can see, we have now extended our
dancing around
and we want to see price stay within here,
right
wick
here.
down, and then push up higher. That's how we'll take advantage of the
if I can get out, I'd rather get out.
We're now going to the low time frame. As you can currently see, I'm also using UTC -5 on my
I worked too hard to get here.
The price here. You can see now we're currently making the wick of that candle there.
New candle just
arrived. This area,
that's good.
We have a
green first.
The price takes out
most
recent low. Following
no, that's no good.
Pushing high, made a high low, pushed up high, broke the high low. That's what we look for. Now I'm looking for a change in state of delivery. Our normal inchy models, which you do get right over here. Price closes above this area. And this is when I spoke to all the members in the live stream that we're going to look to enter gold at this area. We had our stop loss around somewhere around these lows here. And then we targeted using our Fibonacci extension levels at the max extension. And this is our current trade. And this is at 11.
I want you to take me.
You can just see, look at that candle moving now. This 90 candle is really extended, but we still see price action is moving higher now. And you can just take advantage of.
Man, I hate this.
The wicking lower.
Just take me out, man.
Price opens up, wicks lower, and then push up higher.
Let's see if you come back here.
Our trade on gold, very beautiful position.
270, take 270, 270, 270. Ooh, I'm hurting hard.
Right?
I'm gonna reverse this, baby.
Now this kind of closes.
Oh, I don't like when I do that.
Once again.
Come on, man. You freaking you. Oh, you make me hurt. Come on, start moving up.
Order filled.
Thank you. We'll even close orders. Close orders. Okay, we got out with about 300 loss. I'll take that. And now you go. Oh, you're gonna do a double bottom?
Remember looking for price
really? I'm not playing with you. Not playing with you. I'm done with it.
Play for a price. What we are looking for is a MC. What we're looking for is pricing low back into this area, which we do get right here.
Oh yeah, now you go up.
This wick over here.
Now you go up.
That out. I want to see if price can change its state right now. Price does change its delivery. And then now we can look to enter with this trade over here. Starts to low this low here. Target the highest, okay. And the Fibonacci at TP and then stop loss. Then letting price play out. On the candle. There we go. And there you have taken advantage of that entire impulse that price created within this price range. And as you can see, these also emanated live examples onto our trading Discord. And if you would like to join that, you can firstly book a free call with me, or you can also just get our free course, which is within the link in the description. And now they can understand how to use on the 4-hour candle. Once you look at this video, we can learn.
No, that's not what I wanted to do. That's not what I wanted to do. Oh my god, man. I think I need a break from here.
He wants to do something around the New York PM session with the FOMC, I'm pretty sure.
Oh, look at that.
Gold.
Oil? Still see how? Yeah, it's shooting upward. Woke up 2 o'clock. 4 a.m. candle.
So let's take a trip down memory lane about trading. You see, when I started trading, you are enjoying the DAX and the FTSE and currencies at extremely tight spreads.
I don't
Back then when I traded, do you know what the spread was in the Dow intraday? You know you can trade the Dow at a 1.5 point spread. Do you know how much I had to pay in spread? in 2000, 2001 when we started trading that? Any takers? 8 points. Someone has done their homework. Yes, intraday, you paid an 8-point spread. Can you imagine trying to make a living trading the Dow with an 8-point spread intraday? And if you wanted a quarterly contract, you had to pay a 16-point spread. And Euro-dollar, which is today trading, I don't know what CMC's spread is, but it's probably about a 0.5, 0.6 thereabouts. Back then, we paid 3 full points to get into Euro-dollar, and dollar-yen was a 5 points. I mean, this was you're thinking, holy smoke, how did you not blow up immediately? We did blow up immediately because we paid all our money away in commission and spread. But not only that, we don't have access to what you have access today. I heard, I think his name is Ed, he was talking about that with CMC markets, you have pattern recognition programs, you will have news, you will have level 2 data, you will have extremely tight spreads. We didn't even have any of that. I spoke to an old colleague of mine who I used to work with in City Index, and we discussed when did City Index actually get their charting package, and we agreed it was probably around 2005 that we actually got a fully working charting package. Yeah, can you imagine trading with a broker today that doesn't have a charting package? No, of course not. Yet, even though that you have far better spreads, you have access to news, you have access to data, you have access to pattern recognition programs that tells you it's a double button, a head and shoulders, and a wedge and a pennant, etc., and a flag, even though that you have access to way more information in any shape or form, can you trade? No. You're losing as disastrously as we did 20 years ago. And so with the greatest of respect to CMC market, but you're not going to become the trader you want just because your relationship manager at CMC markets is a great guy or girl. Nor are you going to become a great trader because the CMC market platform is great and award-winning. I don't care if it's NASA themselves that has designed the trading platform, won't make a blind bit of difference to your long-term results until you learn to think differently. So what's normal behavior when you get into trading? Oh, let's do one of those weekend courses with one of those gurus, you know. Oh, he talks so elegantly and he's really good looking and his smile is from ear to ear. I want a bit of that. Surely he must know. No one can be that good looking and not know what they're talking about. I'm going to learn about candlesticks. I'm going to learn about RSI, MACD, RSI. Ooh, have you heard about that Bollinger Band? It is amazing. What's that Fibonacci thing? A ratio for every season? 38%, 50%, 61%, 78.6%, 88.4%. You ever heard about the secret ratio of 94.6? It's just between you and I and 2,000 pounds of your money. Thank you very much. Unfortunately, it's still not going to make you a penny. Am I annoying you now?
Gee, I'm glad I got out. It's going to here.
I don't want to be told that I am rubbish at this.
It's going to here.
Ah.
It took my $300, but I got out.
Doing what everyone else is doing, and if
Let's
you
see what we
continue
got
to
here,
do so,
what we got
you're
here,
just
what we got
going
here.
to continue with the inevitable.
What we got here.
And I would like to give you an opportunity to get off that path and start thinking differently. See this book here? It's called The Bible of Technical Analysis. Not the King James Bible for Christians, but the Bible for Technical Analysis, written by Edward
VWAP.
McGee.
So that's another lesson learned. Oh my God, and look at that.
Ladies and gentlemen, were Edwards and
The
McGee
VWAP
traders?
cross.
No, they were not traders. They were
No,
journalists.
I touched the 9.
More
Where's
than
my
1 million
20
copies
here?
of this book has been sold.
Where's my 20
Normal
here?
leads to broke. Following what the brokers are saying, not their advice.
What is this?
And the brokers, they're well-meaning. They want you to
My
do well.
20 is
Why does a
missing.
broker want you to do
This
well?
is my
Well, hell,
EMA
the better you
9,
do, the more you're
right?
going to trade.
Yeah,
The more you're going to trade,
9.
the more commission you're going to place.
So
It's
where's the
logic. Of
Bollinger
course the
Band
brokers want you
20?
to do well. CMC included. I'm not knocking CMC, but CMC are not traders. IG is not traders. City
20.
Index are not trading. Gain Capital are not traders. They're not the ones where you should be getting your guidance
Band
from.
20.
Sure, by all means, learn about
Medium.
technical analysis, but technical analysis has never
Yes,
made
yellow.
anyone anything. You're not going to get rich from trading by learning technical analysis. In short, your problem is not that you don't know enough about technical analysis. Will you trust me on this? That you don't need any more technical analysis.
Wow.
You need a serious review of how you think
I didn't
when
have
you're
my
trading.
20.
So let's try with that. My argument is that if 80-90% of people are losing when they're trading CFDs, this is not a broker problem. This is a human problem. And particularly, I think I mentioned it before, I believe that those 80-90% are perfectly rational people. Intelligent, good-looking, smiling, good mums, good dads, good students, good everything. They're just rubbish traders because they haven't learned to think properly. They haven't learned to deal with fear. So what I would like to do, what I would like to propose is if everyone's normal, please show me what not normal looks like. Please show me what a 10% trader or a 1% trader looks like. And I suppose that's why I'm invited tonight.
Link is here. Here.
So here's a normal person,
Here.
according to Google.
MRKT.
How does a normal person think? Well, if you ask Rodriguez from FXCM, the broker, he did a research on 25,000 of their traders who had executed 43 million trades over a 15-month period. Here's the shocker. Those 43 million trades actually had more winning trades than losing trades. Yeah, the FXCM traders, they were good traders. They had a hit rate of 62%. That's not bad. The problem is that when they won on average 48 points. This is all trading currencies. But when they lost 82 points. You see, if this had been an analysis of my trades or your trades, we could say, well, you probably had a bad week or a bad month. But when you investigate 25,000 people and their behavior, it's no longer bad luck. That's a sample space that is worthy of an investigation. And if it had been a couple of trades, 10 trades, 100 trades, you can argue, well, it's a small sample space. But 43 million trades, of which the majority of them were executed in euro-dollar, one of the most liquid instruments globally, that's a pattern. I am proud to say that I have written a book that will be published next year. I received an email back from the publisher to say, it's excellent. So, well, that's good news. Actually, a word of warning to those of you who like to write a book. Writing a book for me was an incredibly cathartic exercise. I had something that was just boiling up inside me like Vesuvio, and it just exploded down on paper, and I just wrote and wrote and wrote for 2 months. And before I knew it, I'd written 60,000 words and 200 pages. But they never tell you, those publishers, that writing a book is actually only half the battle. Then comes the editing it, and then you have to do this and that, and before you know it, you're beginning to regret you ever wrote the damn thing. But the titles in themselves is telling a lot about my mindset. Normal is a loser. Show me pain. Do you have a trading philosophy? Everyone's a chart expert. Everyone knows charts.
Oh, we could do the 2 o'clock.
To be continued in March next year, I've been told. So, on the face of it, I was interviewed by CNN in 2005, and they wanted to know, how do your traders, your clients trade? And I said, well, the problem with, and at that point I'd only worked there 5 years. I have another 5 years of experience since then. God, it's horrible to look at yourself 15 years ago and think, oh, geez, I wish I looked like that. People love to find the low in a bear trend. People love to find the top in a bull trend. There were people, when I walked in here, saying, when do you think the crash is coming? What crash? I don't know if there's a crash coming. What crystal ball is it that you're looking at? Because I just see a market that keeps making all-time highs. Sure, let's talk about a crash if the market's in a downtrend. Let's not talk about a crash when the market is sitting at its all-time high. People think every reaction in a trend is the beginning of a new trend. I would be sitting there night after night watching the market fall or rise, and our client, sure as hell, the moment the market just ticked in the other direction by a little bit, they would pile on as if the trend had now changed. So my argument here is that people are generally fearful when they're hopeful, and they're hopeful when they're fearful, and I will explain that momentarily.
Sure.
Now, what is normal behavior? I am letting my losses run. Why am I doing that? What am I telling myself? Well, I'm telling myself that I hope that this market is going to turn around. But the real reason is I would like to avoid pain. We have a brain which is millions of years old, and it has one primary function, and that is to keep you alive at all costs. And by the way, also love to make sure that you never experience any pain. Some people, in particular psychologists, refer to this as the ego. It wants to make sure that you maintain your ego preservation.
Take me, you
your
mother
state of
flower.
mind where everything is rosy and good.
Oh,
so
shit.
you'll do anything
Let me
to
see
avoid
if there's
pain.
a little...
Not you, but
Okay,
this
first
thing
down, then
here.
up.
And it doesn't matter what scenario I throw at you. I'm letting my loss run because the indicator says so, or the Fibonacci says so. But actually, you want to avoid pain. I'm taking my profits because, hey, you can't go broke from taking a profit. Still, it's still you avoiding pain. Why? Well, because you hate the idea that the market is going to take back some of your profits. In a moment, I'm going to show you one of my charts after the fact. Not with I bought here, I sold here, but how much I made and how much I lost. I am winning, so I'm reducing my stake size. Why would you do that? Well, because I want to take it easy now. Nope, you want to avoid pain. You can't bear the fact that you made 400 pounds for the day, and God forbid that those 400 pounds would disappear. Let me ask you a different question. I'm just going to come out here on the floor for a second because I'm tired of standing there. Imagine that you made 1,000 pounds on the day versus you lost 1,000 pounds on the day. Who is most likely to carry on trading? The person
Order
that
filled.
has made 1,000 pounds or the person that have lost 1,000 pounds? The person who has lost 1,000 pounds is far more likely to carry on trading because God forbid that he carries on that pain into the night, and he will do anything to get rid of that pain. But when he's made
Order
1,000
filled.
pounds, he'll do anything to protect that because it feels so good to have made 1,000 pounds. So I don't want to jinx it. I could carry on and on and on. I think you should see it for yourself. You're more than welcome, ladies and gentlemen, to have a copy of this presentation. More than welcome. If it can help you, then you can have it.
4 hours. No, it's
Now,
not 4. This
I've been
is
told
4
that I have
hours
5,
right
10 minutes left before you have a well-deserved break and some food.
Order
So,
filled.
let's carry on this for the next 10 minutes or so.
Oh, you've
You'll be
picked
happy
it
to
up.
know that I'm on slide 48 out of 157. It doesn't bode
HDL.
well for the second half, does it? Did you have plans on going home? Then you may want to call the people at
what
home
is
saying,
it? Position
a
on
little late.
ES.
people are
Yes,
fearful when
pick
they're
me up.
hopeful, and they are hopeful when they should be fearful. What do I mean by that? Imagine that you are sat in a position that is making you the aforementioned 1,000 pounds. You're no longer hoping that that 1,000 pounds is going to turn into 2,000 pounds or 3,000 pounds. No, you're fearful that 1,000 pounds is going to be taken from you.
there.
And if you are losing 1,000 pounds, you're
We are
most
sure.
likely going to sit
Okay,
there and
we are
thinking,
sure. Okay, so we're
wouldn't
gonna
it be
pick
great
up
if this position turned around? You're not
right
fearful that position is going to get
225.
even worse.
I'm good with
You're
that.
hopeful that it's going to turn
Actually,
around.
it's coming
And if you want to
here.
have a fighting chance of
Right
making
here.
the markets your ATM machine, and this is not a sales pitch, it's a bit of a cliche, I admit that. But if you want to have a fighting
Where's gonna
chance
take me
of
anyway?
making the markets the place where you take money out on a fairly regular basis, you need
Order
to turn this
filled.
around.
Wow,
How you
we
gonna turn
back
around?
to
Well, I have my
7.
own ideas. So let's
But
take
we
a look
come
at
in here.
not so normal.
Let's see if
let's
we
take
do
a look
2
at
more.
how I operate
Actually,
and
it's
people
3.
who
I
are
gotta
what we
do
call the
3.
1%.
Let's see if he comes back.
Rather than talking about me, which is something I not that good at doing. I prefer to throw the attention some truly great traders.
Because you don't want to leave
One
without
in particular
me.
is someone
That's a
who
good
I
number,
wish I could have
man.
met, but he's no longer with us. His name was
Make
Charlie
sure he
D.
picks me up.
An excellent book called Charlie D, The Legendary Bond Trader, is something you can buy through Wiley. Here he says, the time you know you've become a good trader is that day you're able to win by holding on to a winning position.
Order filled.
And rather than taking half profits, you're adding to your winning position.
Okay, order
Rather than beginning to think,
order
where
black.
should I get out? You're beginning to
These
think,
two are
how can I
one
get
right
deeper
here.
in?
But then
How
this
can
one
I commit more?
with so much
He says,
no
and
volume
he
and
is
all that selling.
a floor trader at Chicago Board of Trade. He says, there are many people in here, in the pit, that have traded for a long time, who have never added to a winning position. Have any of you ever added to a losing trade? Sure we have. Oh,
Order filled.
Daddy, you know, you bought at 20 and then it goes down to 10. You're thinking,
done.
it looked good at 20. It looks even better at 10. But how
Come in
many of
here,
us
I
have
just
bought at
know
20
it, I
and then
just
bought
know
more
it,
at
I just
30
know it.
and bought more at 40 and bought more at 50? Now the raised hands are becoming few and far between. Sure, there will be people who have done it, and good on you. But it's very difficult emotionally to add to a winning trade. It's a lot easier to add to a losing trade because, hey, you feel like you're getting a bargain. You feel like you're buying something which is cheap. And hey,
So
when we
come in
started
here.
learning about
What is
trading, what
this?
were we told? We were told
5562.
buy low and sell high. Quite possibly the most expensive piece of advice ever dished out in the history of mankind. Because every single time I bought low, it always went lower. And every single time I tried to short high, it always seemed to know that I was in and it would go even higher.
It's right here.
No, I prefer to buy high and sell even higher. And I sure do like to sell short low and cover even lower. So, Charlie D goes on to say that it's in our human nature to want to cut our winnings. You bought at 6 and you can get out at 7, get me out! I'll take that profit! That's just human nature. That's who we are. So, he says, if you want to be really good at this, you need to accept that everything you do when you're profitable hurts. It feels uncomfortable. If you're in a position and it doesn't feel uncomfortable,
pick it up.
You're probably not betting big enough.
Oh, you freaking son of a gun.
I want to repeat that. When you're a good trader,
know you're going
everything
there.
you do hurts.
Yeah.
And I'm not talking about
how much
smacking the
is
hand kind
that?
of hurts or smacking the bottom kind of hurts.
How much
Right?
is this
You know,
right here?
If it doesn't feel uncomfortable, you're probably not pressing the position big enough. Here's a snapshot from an open trade. This is equating to
Order filled.
There we
£100,000
go.
in
Okay,
profit.
so 63.
This is not the result of normal thinking. You see, what I'm doing here is, see if I can navigate this gizmo.
So
Just stand over here. My first entry,
is over here.
the market is trading at 135, 25,135, but my first entry was at 25,458.
So the first one should be
But as the
somewhere
market
right
falls,
here, midpoint, right?
I keep adding to my winning position.
That should be.
What do
Oh
most
my
people
God,
do
oh my
when
God,
they are in a
what?
winning position? Now, I know the answer because I sat and watched this for 10 years.
Yeah.
When you're in a
yeah.
winning
Pick it
position,
up,
what
pick
do
it
you
up,
do?
Pick it up, pick it
I
up.
mean, humor me here.
Pick it up. Pick
Take
it
half profit,
You
nip
cannot
a little
go
bit more,
without
move the
your
stop loss
friend.
down so
Don't leave
it's
your
almost
friend
meaningless to have a
behind.
stop loss because you're going to be stopped out by the slightest movement in the other direction.
On the floor.
People are great at
Let's see
taking
if you're
half
doing
profits.
a 74. You
They're just not great at taking half losses.
Cuando 73.
We love to take a bit of a profit home because it feels good. It feels like we're doing the right thing.
Going twice.
Why
Here
on
we
earth
go.
would I
Come on,
risk
come on.
losing
All the
some
way
of my
down.
open profits?
Fucker.
You can't go broke taking a profit. That's what the books are telling me. Now,
You
the amount of
take
time
it
that I've
all,
had
you
10 or
motherflower.
20,000
You
pound
killing me,
profit positions,
cuz. You
that
killing me,
will then
cuz.
turn
Let
into
me
a
see if
zero,
you would do it
a
here.
countless. My
Order
trading
filled.
philosophy, ladies and gentlemen,
Alright. Obviously,
my
you're
trading
gonna
philosophy is that
stay below
I
now,
will never get
73.
out at the
The idea
maximum
is for you to
profit
go all
potential
the way to
ever.
50.
And that
But
is
I'm
the
not
only
asking for
reason
50.
why I am
I'm
still running
asking
this position.
for
No, actually,
68.
that would be disastrous if I was still running it, because that was in
But if
29,000.
you wanna
But
come
in this
down
case,
here,
where
by
did
all
I get out?
means
Did I
do
get out at the
62.
absolute maximum profit potential? No, I certainly did not. Now, it's come to the point where I probably need
Right
to take a
here,
break.
yeah,
So
60.
I think I'd like to
do
do that
62.
with this slide
Let's
here.
do it.
And then
Order
we'll carry on
filled.
after the break. The mental foundation for profitable
2
trading is,
o'clock,
are you
man. That's
prepared
the
to do
candle,
what the
my
90%
friend. That's
are
the
not doing?
candle.
And of course the answer is, yeah, of course I'm
And
prepared to
then
do
the
that. I'll
other
do
one,
anything
and
for
then we
profit.
done.
But actually you
Oh
don't
my
really
goodness.
fully understand what is
I
required.
love it.
It takes a lot of introspection, which I'll
love it.
cover in the second
Man,
half.
I sure wish I
But
knew how
I'm
to
aware of my worst habits.
tailgate
I am
trade,
aware of my
man.
weaknesses.
I wish I
And I have a
wish.
routine to counteract
Wow,
those.
my friend, you could
I
make
am
that much
constantly pushing
just for
myself.
knowing the
You never get
candles,
to
just
trade
for reading
100,
these.
200,
Are you
300
getting
pounds a
paid for
point
that?
unless
Ooh,
you constantly push the envelope.
amazing,
There are some people in here who are well past 50 years
amazing.
old, including myself. Now, interesting story to set you off for your dinner. I assume most people in here have a driver's license, and I assume that many people in here have driven for many years.
My God, we almost
And
there.
we all consider ourselves good drivers.
What are we looking here? 68? We
And I
got
thought I was a good
62.
driver. I mean, I've been driving since I was 17, which is a miracle because you're not allowed in Denmark to drive until you're 18. Don't ask me how, but that's the fact.
Anyway,
And now I'm
I'm
50,
gonna
and
let
so I've been
I'm
trading.
gonna
I'm sorry,
let
I've been,
this
I've
go,
been
man.
driving
I wanna go
for
to
32
sleep.
years, 33 years.
I
And
put
then
on
a
the
friend of
tray,
mine
and I
decided
want
he
I
wanted to
wanna
give me a
see
present
how
for my
my
birthday.
friend is
It was
over
one of those
here
red letter days where
on
you go out on a
CJ
race
that
course. It could have
almost
been any
got
red
me.
letter, could have been anything, but
What?
this was, you get to drive some very
Is
fast
this
cars.
CL? CL?
And then I realized just how bad a
Is this the
driver
4
I
hour?
am.
6 o'clock.
Because when it really is a matter of putting, what do you say in England?
22.
Pedal
2
to the
o'clock
metal?
right
Or,
there.
yeah, is that the right saying? When you really do press that accelerator and you're not just driving straight ahead down the M6, but you have twists and turns.
CJ,
That's when you
okay.
know
So
how
what's up?
bad a driver you truly are.
What
So
up,
we can
baby?
do something
What
for 30
up?
years without actually be particularly good at it. And
4
you can
hour,
continue
no
down this
movement.
path of trading for the next 30 years.
How's the 15?
But there is an enormously high probability
very
that you're
nice.
never going to fulfill your maximum potential unless you begin to, shall I say, stop staring so much at the chart and
Very
begin to
interesting.
cultivate a very different mindset.
Oh, this one from 500? Did something else pop? Was I ever there? Yes. What did it do? And every time I look at the chart,
Let me give you an
I see
idea
something different.
Of the kind
Oh,
of
yeah, it is
technical
different.
analysis that I deploy.
It's different
I think-
because it's not 4 hour.
I think the odds are high you'll never have heard of that kind of technical analysis. So let me give you a sample of the
Not
kind
4
of
hour,
preparation
it's
I
1 hour.
do
It's
ahead of a
30
trading day.
minutes.
Say for the sake of the argument that it is Sunday night and I'm preparing for trading on Monday, or even I'm preparing for trading on Monday.
Oh,
I
Aku
have
at the
developed
1,
a
right?
technical analysis
Aku at the
that I
1.
called scenario
The
analysis.
one that I didn't pick
Scenario
up
analysis
earlier.
is something I invented myself. I have never heard anyone
Right.
discuss it, talk it, use it. Let me give you an idea of what I mean by scenario analysis. Imagine the scenario in the Dow Jones Index, or it could have been anything that
Didn't
I have
pick me up
researched.
again.
Say the scenario is
You are 70
Friday's
from
trading
72.
was
So I had
unable
an opportunity to
trade
get to
above
72.
the
Now you are
highs
70.
on Thursday.
Really?
So as you observed over the weekend, how
Well-
did the market trade on Friday
Oh, you came back.
versus how was it trading on
You
Thursday?
ain't playing.
And if during Friday
Hmm.
The Dow was unable
How
to
many
get
people you
above
found
the
at
highest
70?
point that we saw on Thursday.
A lot. Look at this.
It has
17,
severe
17, tin,
ramifications
tin, tin.
for what you can
I
expect
don't
on
like
Monday.
this.
Order
My
filled.
research
I
suggests that
don't
there
like
is a
this.
95
Order filled.
I'm
chance
gonna let it go.
that
Playing
during
too
Monday,
much with my head.
the Dow will trade down to the lows seen on Friday, and in
Where
most
do we
cases
exit
will
at?
trade lower. Now, what is that statistics based
We
on?
exit
This is
at
based on
even
manual
72.
analysis of the Dow Jones on charts
I
spanning
want to
back
be in
from
the. But
2008
now you are
until
72.
2019. Off the
Let
top
me
of my
see
head,
something.
over the last
Let's try
year,
here.
there has been
Times
24
1.
occurrences where I, before I went into the trading session on
73.
Monday, could observe
If you go there.
that the Dow was unable during Friday's trading session to trade above the highs.
You know what? I'm gonna go.
And out of those 24 occurrences,
I'm gonna go to
in
sleep.
21
I'm not gonna leave any
of
others
those
out because I
24
haven't done any
occurrences,
homework.
the market
Thank you very
traded
much. I hope you
below
liked what
the
you
lows
saw
of the
earlier.
Friday.
And by the way, leave a
Data
like,
crunching
leave a
is a
comment, tell me where
technical
you're
analysis
visiting from and
all
how
that
long
you
have you
want.
been trading and
But when I go into the
what
trading
is your
session
goal
on a Monday, I know technical
for
analysis on par
trading.
with how you know technical analysis. I know
Sayonara.
the patterns, I know the trend
This is
lines, I
strong
know
to the
the
downside.
ratios,
I
I
already
know the
traveled all
day's
this.
high, the week's high, the day's
Anyway,
low, the week low. But
we're gonna
armed with the
go
knowledge
here
of how the
and we're gonna
market
say
has tended to react based on
this
what has
one.
happened in what I call the scenario analysis,
Stop
I am in a
streaming.
position
I'm gonna put yes. What did it say
to
it was?
place
How much
myself
was it?
in the market
How much was it?
and hopefully
31.
taking advantage.
31.
And if
Okay.
I'm being run into one of those
You
free
would not
times
be
when it
able
didn't work, well, then the stop loss will take care of the
No.
rest. The framework that I operate with. You see, I've accepted with every